What's going on, everybody? Welcome back to episode 13 of this SPY series. So today, September 29th, we've got SPY on the board again. And every day I tell you guys, if you guys can play this stuff consistently and do it consistently, you will beat the market. You'll win at trading just SPY. You don't have to go... Now, there's nothing saying you have to trade just SPY. There's thousands of plays every day. The Discord room that I have has live trading bots that sends out setups on every time frame for you guys. But you could just play SPY. And so now we've done this for 2 weeks. A while back I discovered that SPY was working really well on the 30. And it is a little bit of a hashtag 30 and 30 strategy, but even when we play the continuations, we're getting wins. So let's get through this stuff. I started early. There's still 2 hours left in the market. But again, I'm doing this now because, for one, I have the time to do it now. And number two, you guys don't need to trade anymore. You don't need to trade all day. I mean, if you lose a couple and you want to try a third one, great. But you would have done really well on SPY today if you would have traded SPY. So let's go through it. This is the first 30-minute bar on September 29th. Market opens up here. So where the market opens, I put this blue line for a visual. So I know anytime we're above that blue line, we're bullish. Anytime we're below that blue line, we're bearish. It also tells me that anytime we're above that blue line, this day is going to be green. And anytime we're below it, the day is going to be red. Now, in order for me to make these trades, I need these two time frames, the hourly and the daily. I need those in the same direction. So if we're looking for a trade to the downside, I need the hourly and the daily red. If we're looking up, I need the hourly and the daily green. So this is the first 30-minute bar. Let's see what happens on the next 30-minute candle. Boom. There you go. Okay. That's it, guys. One trade, less than 30 minutes. Okay, so we triggered here. You could have bought puts at 362.81. Me buying these puts, I would have been looking at 362, maybe a 361 put. This is an excellent, excellent win. Okay, so if we look at this, I'm going to put in a stop loss line. And we'll hop down to the 5 because looking at this in hindsight, you can say, just looking at this chart, you can say, oh yeah, look at this. It opened and it came all the way down and it ended up here. And that's it. That's not the way this stuff works, and I don't want to sugarcoat anything for you guys. I want you guys to actually play this stuff. But if we hop down to the 5, we've got our trigger marked, we have our targets marked. So we go down to the 5-minute, and we'll go to the opening, which is right here. Okay, so 5, 10, 15, 20, 25, 30. This section this way is the first 30-minute bar. Then we can look at this and realistically we can say, okay, if this is the way you wanted to play it. So we came down through that trigger, okay? We're in the trade. We're through the first target. We're through the second target. Now, this is where you guys have to determine your risk. Are you going to put your stop loss here? If you can see, let me zoom in so you can see that. Are you going to put your stop loss at the top or, within that range of the second target? Because now that's a 71-cent move, and that's actually a really, really good move in SPY. So are you going to take that and say, yep, I'm good with it? Or are you going to assume a little bit more risk and say, I'm okay taking my profits here instead and leaving with a little bit for the chance of a bigger gain? Okay, so if you left it up here, look, you were still in the trade, okay, because we opened and we trended down further. If you said, hey, I'm putting my stop loss there, I'm good with the money, see money, take money, you let the candlesticks and now realistically, should you let the candlesticks stop you out? Sure, you can also let those targets stop you out because I don't ever want you guys to see yourself have a green trade go red. So worst case on this thing, you would have played it here, okay, at that first target. If you played the second target, you're out. If you played the first target, well, you're still in, okay? And then we come down even further and further. Okay, so if you followed that, then you could have had your stop loss there as it came through and you would have been out. And if you would have said, no, I'm good, I'm waiting, I'm keeping it there, the next candle comes down, we hit that target. Okay, so now if you're comfortable at that target, and then this is all it is, guys. You just need to move your stop losses and let the candlesticks and the target stop you out. And I don't want, like, this is the psychology of trading again. If you got out up here, right, because you came back through that target, don't ever let that play a decision on your next trade saying, if I would have just held, I would have got a bigger move. Okay, this is a good move. If you held and got a bigger move, congratulations. But if you can't handle that risk, don't, because sometimes what happens is it won't come back down like this. It'll just reverse back to the upside. Okay, so you guys need to be comfortable with where you're taking your money. If you were comfortable taking money there and you were happy with that, then be happy with that. And, you know, if your risk was a little bit higher, and you could have held up to there, okay? And then, again, it all depends on where your risk is. You could have made, this could have been your stop loss here. If you were letting, let's say you were like, I'm going to let the candle stop me out, okay? So now you're either letting this top right here stop you out, which would have been, you know, a 50-cent move, or the trigger. And if you're saying, I'm letting the candle stop me out, well, now you can put your stop loss at that candle. There's different ways. There is no one perfect way to play this stuff. You can play it off the targets with your stop losses. You can play it off the top of the candles. If you're using the top of the candles, look, stop loss, stop loss, stop loss, and you're out of the trade right here as this candle comes up through. Okay, and if you're down in this trade already to this point where SPY is at like a 2% loss already, and you're like, SPY doesn't usually have 2% plus losses very often. So for it to finish at a 2% loss, I wouldn't say that's a high probability, but it can happen. So if you come down and you're like, nah, I'm going to take my profits here because I've already gone from 362.81 to 360.90, a $2 move, I'm good. So everything depends on the risk assessment of the trader itself. Okay, so let's go see what happens on the next candle. Then we get this inside bar. So again, you can play the 30-minute candle, but there's way more risk involved in this. Because if you're saying, I'm waiting for my stop losses at the top of the candles, look, reduce your risk. If this is your stop loss, guys, you missed all of this profit here. Okay, you missed all of it. Because this inside bar happens, and then watch what happens next. Back above, you're out, okay, for a loss. So I always try and manage my risk on a smaller time frame. And that's just me. And again, if you're saying I'm just watching this 30-minute candle, and you've come up down through these targets, again, targets can be your stop losses, the candlesticks can be your stop losses, or the candlesticks on a smaller time frame can be your stop losses. It all depends on the risk management of the trader. Okay, so we go up to the next one. Would you guys take these trades? Okay, would you take this trigger? I think someone tweeted at me saying, you know, I saw these trades and I sat on them and I didn't take them because the time frame continuity wasn't in my favor. He said he couldn't get the day to flip. And no, you couldn't get the day to flip because the day will not flip until we cross that blue line. So I only trade into time frame continuity because it gives me higher probability. Now, would you have made money on these trades? Sure you would have, yep. But the probability of that is less than if it would be if you had full time frame continuity. So if we go on to the next candle, now we have this inside bar, and now we can start looking again. Okay, we can start looking for that break. Let me delete some of these candles so we're not confused at what we're looking at. Okay, so now you've got one trade in the books, guys, and you could be done for the day. Or you could say, nah, I got time, I'm going to watch a little more. So now, We're looking for a trigger to the downside. Now, again, it could trigger to the upside. Yep. But the time frame continuity isn't there. And that's one of the most important pieces to trading this. There's your next candle. Okay? You triggered. Now, you have two spots you can put your stop losses. One, at the trigger. So you leave the trade with 0 and just your fees. Or you put it at the target. So let's say I've already made one trade. I want to make sure I stay in profit on the second trade. Let's see what happens on the next candle. And let's zoom in on this, guys, because look at how that tags out exactly. And if it would have come, and this is why I tell you guys, you don't have to put your stop loss exactly at the target. Put it a little bit above, okay? And that's okay. I would actually prefer you guys to do this because sometimes it'll just creep above and then hammer back down, which is exactly what we had happen. So we're still in this trade now, guys. Still in it. Okay, so now you can move your stop loss to this target. And it's that easy. And if you're saying to yourself, well, I've already done really well on one trade. Look at how well I've done on this trade already, from 362.44 all the way down to 361.50 in that range, call it. You can take your profits. I'm perfectly okay with that. You're 2 for 2. And if you would have traded today and on Wednesday, you probably wouldn't even needed to trade Friday, because these 2 days would have made a ridiculously good week. So let's see what happens on the next candle, and we're probably going to shift right forward because... Okay, so here's what happened. So now we're live trading. These candles are live. So let's go back to the 5-minute and see what happened there. So we're, let me see, 30, 60. 60 minutes in, we'll go to the 5. And we're going to see where we triggered. There was our trigger. 5, 10, 15, 20, 25, 30. 5, 10, 15, 20, 25, 30. And the next candle comes right up through. So whether you were out of this trade here or you were out of this trade here, okay, it went through your target or through your target. So you're at a stop loss. Now, this is the start of the 11:30 candle. So from this one, we trend all the way back up and then we come back down. So here's the other thing I want to show you guys. So what happened there, we closed here and then this candle came all the way back up to trigger and we went outside, well, 2 up. And then we started to come all the way back down. Now, as we're coming through that outside bar, can you take this trade? You're damn right you can take it, okay? Because now we just have an outside bar and we're continuing to trend down in that direction. So again, let's hop down to the 5 to see how you could have managed this, and let's put in some more green targets. Make that one green. Like, this was a phenomenal day. If you were trading SPY today, the way I've taught you guys, this was a phenomenal day. Now, I'm not going to go back and mark out targets further back that way, because it's a little bit too far, and I believe we would have just come back up through those targets anyways. But let's go check. So it wouldn't have been this candle, it would have been this one, where we come back through. Okay? So now you can say, I've triggered, I hit target 1, I hit target 2, and now we manage our trade. Okay, so we triggered, then we hit target 1, then we hit target 2, there's our stop loss, back up through, again, out of the trade. 361.44 to 360.65. Another winning trade. And it really is, guys, it really is this simple. And I understand when you're live trading this stuff, the emotions that overcome you, I get that. I completely understand that. And that's the biggest part and the hardest part of trading is those emotions. But if you can get by that stuff, guys, and just trade and move your stop losses with the candles, with the targets, you would have had 1 winning trade, 2 winning trades, 3 winning trades on the day, 3 for 3. You would have been over 100% on the day on this stuff. Well, I guess it depends on how you're playing your expiry dates, but I guess anywhere from 40 plus percent for sure on any one of these 3 trades, depending on how you play your expiry dates and, of course, your strike prices. But when I take my strikes, it's like $1 away. $1 away from the trigger price. So 361.44, my strike is 361. But that's it, guys. That's SPY. That's how to play SPY 30 in a nutshell. Okay, so we did it today. We did it yesterday really, really well. So we're going to try to do it again on Friday. I'm not going to be around Friday. We're headed out for the weekend. But I wish you guys good luck. Watch these videos. There's a video at the end, the top right corner. It's the very first video I did to teach you guys on this stuff. And then there's a full series, 13-part series so far, on how we trade SPY every single day on the 30-minute chart for profit. Make sure you guys are subscribed down below. Join me on Twitter at Mr. Clark Griswold. Get it on the Discord. Griswold Trading. The link is in the description below. Get it on the Griswold Gold membership. It gets you a ton of free stuff. Okay? It includes one-on-ones, private one-on-ones, live trading bots, the Trading View indicator. I've got a 1-hour Strat course that I've created that's in there for the premium members. So go check that stuff out. I wish you good luck on Lotto Friday, guys, and we will see you on the next one. Bye-bye.